And we haven't played a game of Would You Rather here in a while. So I want to play a game of Would You Rather with you two guys here because I
One
got
of
two.
my favorite games, then.
So obviously looking at the sector, we got the breakout there on XLV, though we're kind of giving it all back today with the algos helping into all of that. I'm looking at this space and I'm looking specifically at two companies. And whenever I do, whenever I analyze companies, I always like to go high price and under 100. So I've got two for you guys this week.
Got it.
First one is Johnson and Johnson, and these are both breakout type candidates. Okay, so I've got Johnson and Johnson there, and I've also got Gilead, GILD. One's $100. One is $180 stock. So I'm looking at the breakout above 180 there for Johnson and Johnson, and of course we've got GILD here with that break above 90. Which would you rather, gentlemen?
I got a question for you to help with the would rather.
Mhm.
Are you looking short-term swing trade, looking a little bit more combo position trade? What's your time frame you're
You
looking
know
at
me.
here?
I'm position trade. I like
Okay.
to let it cook.
So you're not looking at daily, and I do know that about you. I just wanted to ask for the public. But so you're not looking at it from hey, I'm adjusting stop loss on a daily basis. I'm looking to lock in profit. You're looking at saying, I want to take advantage of a trend, right? I
Hmm.
want to take advantage of something not over the next week, but over the next 2, 3, 4 weeks
Yep.
type scenario. Okay, that helps. All right, let's go ahead and Greg. What I'm going to do is I'm going to break them down technically from a multiple time frame perspective, and then I'll bring Greg in to kind of break them down how he breaks them down, and then we'll both give you our answer on which one would we rather. Sound good?
Sounds good.
All right, let's first start with Gilead here, and I'm going to start on both charts. I'm going to start on the weekly chart. Okay, so first and foremost, Gilead here is just parabolic after their recent earnings report, where they came in at a whopping 1.9 EPS number, and ever since then, that blow off top just boom, 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 and just fading action all the way up. Now you're looking at a high base on the weekly chart here. The high base working up at the top. Overhead is right there in the 90 zone. Typically, you know how it works, right? You break out of 90, it always goes to 100 90% of the time, that type of situation. And then when you come out to the daily chart, you're looking at something that a little bit of a rounding top here, hasn't had any pivot formations, really just fading type price action, nothing of any consistency, hasn't even had, 1 day up, 1 day down type scenarios. But really look at that 9 EMA, just providing that support all the way up. Now you're looking pretty clean right there above 89.75, right there with a high base type situation. Not exactly a perfect picture that you're looking at here on the daily chart, more rounding, no pivot formations. But what cleans up a lot of this? A breakout cleans up a lot of this. So you are talking about a breakout on a multiple time frame perspective on Gilead, but you're really talking about additional momentum here. You're playing at the highs, which is a little bit, I don't want to say concerning because it's leadership, but it's a little bit difficult to just play at the highs after a little bit of a rounding top. So you are looking at a confirmation breakout on Gilead right there in the $90 range. Now, when you're looking at this from a fundamental perspective, PE ratio is a little bit elevated here on Gilead right now at about 33 forward PE ratio, right there in about the 13. That's a lot of that is because we've went from 66 to 88 in the last 2 months without any type of contraction coming back down. When you're looking at Johnson and Johnson here, a little bit of a different perspective, a little bit of a different picture, and not the consistency you would like to see in any type of swing trade. But Johnson and Johnson's not a swing trading stock. You're looking at it from a position perspective, and so from a position perspective, I got to ask the question: are you in the right position from a breakout perspective? Are you going into a trend, or are you attaching yourself to a trend? In Gilead, you're attaching yourself to a trend that already exists. That it's existed for the last 2 months. It hasn't had any pivot formations, and now you're talking about a breakout against a high base on a weekly chart and a breakout against a high base on a daily chart. That's momentum type analysis. That swing trader type analysis. I'm not sure that would fit from a Gilead perspective, that position trader type technical backdrop. And so when you're looking at Johnson and Johnson, and I'm going to come out to the weekly chart here. You're looking at that 180, good high base here on the 180, good high base here. It does coincide with some old resistance of the past. And so you look at the last 3-4 weeks is a little bit of short-term consolidation. 180 is the number, and a breakout of 180 probably does lead to price discovery, probably coming right back into the 183 by 186. I do think Johnson and Johnson would be in a better situation because of you're not attaching yourself to a trend like you're doing with Gilead. You are coming into what you would consider a breakout that would be starting a trend. And so, for example, just to give you a little bit of perspective, and then I'll bring in Coach Greg to give me his thoughts on Gilead versus Johnson and Johnson. This is what Gilead is doing. It's up. It's high base, and then you basically say, I'm gonna buy that breakout, and you're just gonna carry it through that one wave. You don't have any pivot formations to adjust stop loss. And so you basically say, let me break out, let me ride the 9. That's it. Let me adjust stop loss against the 9, which means you're going to make daily decisions. You're going to make daily decisions on adjusting stop loss. You're going to be tracking it on a daily basis. Whereas when you're looking at the picture of Johnson and Johnson, you're looking at this type of number over time, kind of picks its head above, and then it comes back in, and then it hesitates, and then it hesitates, and then it breaks out, which means you're at the beginning point of a trend. And when you're at the beginning point, and again, I'm talking about things that are at the elevated at the top of the chart, but you're talking about on Gilead, it's just a short-term trend at the top of the chart. You're attaching yourself to the momentum of that position. Whereas with Johnson and Johnson, I think you have a little bit of a different perspective, not a massively different perspective. We're talking about two like components within the healthcare space. But when you are looking at that from a weekly perspective, let me come out to Johnson and Johnson. If you just wanted a complete opposite perspective, there's Rivian. But if you looking at Johnson and Johnson, I just think this high base here against the backdrop of 180, you look at this potential here as the breakout of 180 is the beginning point of a new trend. Not necessarily a new trend against the existing trend, a new short-term trend going on that breakout of 180. And so I do like it, the position trade on Johnson and Johnson, slightly more on a breakout of 180 than I do attaching yourself to the momentum of Gilead. It doesn't mean Johnson and Johnson's a better trade than Gilead. If you were to ask the swing trader conversation, I would probably have a different conversation on Gilead and just saying, hey, let's buy the $90 breakout. Let's put a stop loss underneath the 90 EMA and let's ride that 90 EMA as long as we can. Let's stay on that train as long as we can. But when you're talking about Johnson and Johnson on a swing trade, I think you got to be looking at 183 by 186, and that's not going to be enough to justify a swing trade. So I do think you're looking at Johnson and Johnson more from a position trader perspective. I do think the breakout against a high base with the combo resistance touch point at 180 would be the beginning point of a new short-term uptrend, which means I do prefer the Johnson and Johnson 180 breakout over the continuation momentum 90 breakout against Gilead. I do want to bring on Coach Greg, though. What's your thoughts?
Yeah, can you bring up Gilead for me on that weekly chart for me? So my biggest concerns here, and you always want to reward strength as a swing trader. And so you kind of talked about this, Matt, and strength begets strength pretty much. Now, the problem with strength is at some point in time, it fades. And to me, I look at this here and I go, this is fading, right? And this is on a weekly chart. We had that big blast off after earnings. That's great. We got lots of follow through, which is also great. But now look at the last couple of weeks here. Little doji candle, much smaller candle than anything else we've seen. And the other thing that I look at here is how much juice does this have left? Look how far away from the moving. Look how far away from the moving averages, all of them, mind you. Look how far away from them the price action is right now. That is an unusual condition for almost any stock, almost anyone. So it's definitely going to be an unusual condition for here. So could there be more upside? Absolutely. I do like, as Matt said, 90 usually, creates 100, right? I follow that because it just happens a lot. But in this particular case, I'd rather see this trim sideways for 2 or 3 weeks and then have some juice to go, because if those moving averages can't catch up, that's a lot of energy that's been expended. I always look at this kind of as a rocket ship. It's only got so much juice before it's going to fail. For that reason, I don't think I'd want to get into Gilead here. Also, look at the big chart here. This is a 5-year chart here. Gilead is very up and down. I think as a swing trade, or, you know, depending on the position of it, you could do a position trade in Gilead. I just don't think this is the time. You know, it would have helped back in late 2020 on the downside. You know, if we'd gotten into this, you know, in October, that would have been different. Okay. But for me, this one just doesn't get me, you know, jacked up for a position trade, because I think it's run its course. And again, that's just all the technicals that I put into it. Now, if we go to Johnson and Johnson on the weekly, okay, what I want you to do is I want you to look at a couple of different things here. If we look from left to right, so this is actually, can you back that out to the whole 5 years there, Matt, for me? So if you look from left to right, okay, this thing moves on about a 45-degree angle from left to right. It's continually moving upwards. Now, obviously, it has its fits and starts. If I'm looking at this, this is how I want my equity curve to look, right? And so you want that equity curve to continue. I think Johnson & Johnson has an opportunity to do that. I like the current high base pattern that it's putting in. It's got a multiple top to it. I think it's got at least three touches on it. I think it's got a little bit better opportunity here, but it's also, history is showing me that it likes to go in this manner. Even when it gets beat down a little bit, it tends to turn around and continue on that manner. So if I'm position trading, I want something that's going to continue in that manner. Now, I may not be in for all those moves, but that's the kind of personality I want. And then if I look at the moving averages here on the weekly as well, this is nice and tight to those moving averages. There's enough juice there. There's enough energy where we could get that potential breakout and start to push our way up to that 190. Then if you take this even a little bit further from a position trade, you know, as an investor, these guys are a rock star dividend payer, good solid company, you know, so I'm not trading that necessarily, but I'm always having that in the back of my mind as well. So for me, you know, Johnson & Johnson is the way to go.